Okay. You know, the audio was a little late. So let's listen. One of the greatest theme songs in all of sports, Matt. Here come the Hawks, the mighty Blackhawks. Listen, I'm late and I apologize for my RIP to the Golden Jet. Matt, as a Chicago kid growing up, I went to a few Hawks games when I was very young. And I want your take on some of the things that we miss, and that is incredibly loud stadiums. I mean, I remember Chicago Stadium as a kid being so loud, it actually scared me. And as an adult, I had the pleasure to go to Detroit more than a few times and catch the Red Wings when they were great at Joe Louis. Mm-hmm. And the thundering of those smaller stadiums without the skyboxes and the gratuity booths and everybody packed in was just something to behold. I remember a game on a Friday night at Chicago Stadium where they were playing the Blues, and I thought the fans were going to take the ice. I really thought that everybody should just calm down because this shit's getting out of hand.
Right.
Oh, just so great. And let me just share here for a second. We gotta do the Golden Jet. How about Matt? Third still in scoring all time. Gretzky, your guy Gordy. And here's the old stadium. Look, everybody dressed up for a game too. Look at this guy. Anyway, I had to bring it in. The other thing I wanted to talk about too is how history repeats itself, because I had forgot, Matt, that he left the Blackhawks because they wouldn't pay him. And he went to the Winnipeg Jets, a rival league. Wow, does that sound familiar in today's
WHL, right?
The WHA, World Hockey Association.
Yeah.
Went to the Winnipeg Jets and played there in that league for 3 years. Ended up with 900 goals, 600 of them or something like that total. But the rivalry forced the NHL to swallow 3 of the teams and dissolve that league. And I'm sure back then there were people calling him out and saying, the history doesn't matter to him and he's just out for the money. You know what? You're a player. That's what you're supposed to be, is out for the money.
Yeah.
And it just reminded me of what we got going on today. And he was a true pioneer in saying to management, you know what? I'm worth more than that. And you know how I know I'm worth more than that? Because somebody's offered me the money.
Right.
It's like, I'm not saying I'm worth more than that because I'm egotistical. I'm worth more than that because they've actually written the check. I don't know. Interesting times. And the other thing too, Matt, I'm not sure.
It is interesting. And so many people, like I was telling you before, like professional golfers, like they're stuck in the thing that PGA is still the greatest thing. Well, yeah, I mean, if you pay, the purses are as big as they could be or should be. Yeah, maybe. But why is the free market? Just because it's the Saudis paying for it, why is that a bad thing? It's, they have the oil money. Why can't they spend it any way they want?
It's totally hypocritical.
Right. I mean, that's the thing. It's like, oh, you don't want to pay the players what they're paying, but I mean,
not only that, I think we've pointed out in this that it's trickled down to what, pickleball and to tennis. All these other sports franchises are paying people more of the purse because they don't want to face the competition from another league coming in. Right. Anyway, the other thing I thought about with Bobby Hull that I had forgot, one of the great father-son duos that made a professional sports league. Because Brett Hull he was good.
Yeah, he spent his twilight years in Detroit when they were winning too. So yeah.
I mean, there's not very many. It doesn't happen that often. And we shared Ken Griffey with the Cincinnati Reds lineup, and his son obviously was great. I mean, there's just the Bonds for sure.
Yep.
But there's only a handful of superstars that have a son that come in and become exceptional at the highest level also. Tips off, RIP Bobby Hull. Colorful guy. Some people loved him. Some people hated him. But from what I know, one of the best tippers out there. If you were in the restaurant business, 5 C notes very routinely came your way.
Wow.
Which
is a lot of money back then in the 60s.
So, Matt, let me share this because we're going to stick on sports because everybody's waiting on the weekend. Jobs tomorrow and Google, Facebook.
No,
Apple,
Facebook already happened. Apple, Facebook, Amazon.
Apple, Facebook, Amazon today.
No,
after the close.
Google, Microsoft.
Thank you. Thank you for being clear.
Well, you got me all confused. Google, Amazon, Apple, all today. We've already
Google,
had
Amazon, Matt. Outkicks comes out with their first mock draft. All right. How long have I been talking about this? Chicago Bears have the #1 pick, and they're saying they're gonna trade Justin Fields and draft Bryce Young, QB Alabama, #1. Let me just tell you something how I feel about this. I couldn't be on one hand, I couldn't be more confused because I think this is the best pick, the 3 pick. You need the best. If there's a defensive tackle that can change the line of scrimmage immediately, like that's got to be your guy. They were terrible defensively last year.
I mean, that makes sense. I don't know who's on the Bears, so I don't know much about them. This is your specialty area for sure. But choosing another quarterback just seems like stupid.
Especially a guy that might have
unless they're going to trade him for,
here's my problem. The guy could have the same problem as Justin Fields at this level. Yeah, he's great, he's athletic, but can he do 3 reads down?
You could argue so would CJ Stroud. I mean, whatever, either one of them. I agree with you.
I agree. It's the same thing. You know the defensive tackle, you would think, has got a better chance to immediately impact, just like your boy Hutchinson did in Detroit. I don't know. Yeah. I just think defense wins.
Well, I mean, you see, and you see what Bosa did for the 49ers. You see what, his brother did for the Chargers. I mean, you see it all over the league. I mean, I think the Chiefs are underappreciated what they have on their defensive line. And that kind of showed in the game against Burrow. I mean, those guys were lining up left, right, and smashing the hell out of them, especially the first quarter until they kind of got it figured out. But yeah. It's not a bad thing.
Let's talk what we usually talk about, which is price discovery. And you can go anywhere you want from this. I just wanted to point this out. RJR Capital sharing a markets and mayhem share, talking about unrealized bank losses over 770 billion Fed discount window borrowing. And the 8 biggest banks have a buffer against unexpected losses of only about the same size they had in 2006. Man, I was under the impression that the banks are way more capitalized and ready for tough times ahead than they're sharing here. The market seems to be shoving everything, just brushing it off the shoulders.
I mean, the market is absolutely pricing a no landing. We're not even going to land. We're just going to continue flying. So
I haven't heard it put that way. The no landing up 20% now in this, but on the way in, you had some interesting insights about the rally in 2000.
I mean, in early January, we had a sell off back in 2000, and we rallied like 50% in the NASDAQ before it sold off again. So bear markets are vicious, man, and we're in one. I mean, this is a perfect example of a bear market. And if what's happening now is everybody that was selling 3,800 is buying 4,200. I don't know. I think the next couple weeks, again, very data heavy this week, again, very hard to step in front of it. When Facebook blew out, or they missed their earnings, they were horrible revenues, misses, and they're going to bring efficiencies. Now this is the efficiency. So if you listen to their call, I was like, there's nothing positive about that, but the stock, let's just bring it up. The stock is shooting to the moon. It's at the high of the day here at 193, up $40, 26%. You want to be short Google, Microsoft, or Google, Amazon, Apple with that type of thing? Probably not. Probably not.
So
And that's why,
your
and
your
that's why
mantra is patience here. Patience.
I think, yeah, let them take it as high as I mean, let them take it as high as they want. 4,300 has been in the targets for me for some time. And really the bullish case for me, if you get over 4,350, then we're going to go to 5,000. That's when that will happen. But look at Meta. This is just today's, it spiked right off the open. This is 8 o'clock. This is where we are now. It's an all-time high, or not an all-time high, but a high on this move. But again, this thing got down to the 80 bucks on the last earnings, a quarter before 88, and now has gone all the way up here, straight shot. And these, and this is a $500 billion market cap here today. So, we've gone up, that means we've gone up 300 billion in the last month. So money is,
I don't care what
that's real. That's real, right?
Right. No, for sure.
And the kind of the breakdown was somewhere in here. So there's gaps all the way up here to 300. Anything is possible, Bob. Anything is possible. Nothing surprises me anymore. And you have to respect these. Again, there hasn't been. I won't sell, and I won't chase. I'm not going to be chasing this stuff here. I'm not buying calls for tomorrow's earnings. I'm not getting all excited. Only thing I'm doing is kind of longer term, buying some puts out in March today. I am buying a little bit today, but and that's more, I'm looking in the money, 4,300 SPIX, SPX. That's kind of what I'm looking at. It's nothing super sexy, nothing that's I don't think it's going to pay me tomorrow. So, but the prices are just, but I think it's too dangerous to buy or sell in the money either way right now. I just think it's too dangerous. So, maybe you could put on some type of, straddle where you're getting long, just volatility, but we're just going up right now. So it's why fight it? It's a monster right now. And until all the earnings come out, and the big ones are tonight, and based on how this has moved right up here, right? They're carrying them out on a stretcher. I just can't get in front of it. I mean, it's just like, why wouldn't we continue to go up?
I said
the things to me that are interesting here is gold and the dollar are telling are telling a little bit of a story to me. I don't know what the story is, and we may find out in the next few weeks. But we've got gold's 1930. It spiked all the way up here to, where was it? 1970s, 1975. That was a good year, wasn't it? 1975, Bob?
I had a nice time in 1975, tell you the truth.
I mean, but the reversal here today is interesting. And again, nobody's really talking about it, but we're at the low of the day. I mean, we spiked overnight and have reversed all the way down here. I mean, that's significant. It's a 2% move all the way back to 1925 or so. So again, I don't know what it means. It just gets us back into this area. So we had a throw over, and we saw the same thing in the dollar. We had a throw under, and you could look at, I'll bring up the euro just so you can see it expressed in the euro, because the euro did the same thing. It spiked over 110, big spike, all the way up to 110.50s. I mean, huge spike. And this all happened, last night, again, on the European opens. And then they've just hammered them. So they had a spike from the Fed, and then harsh reversal. Again, I don't know what it means, but everything's been going up. So why are these things, are they leading us again? Or is it just profit taking? It's not like we're back below 108 or anything like that. It's not rolling over. And really the same thing when it comes to the dollar, right? And you'll see the spike here if I can get to it quick enough. But we got all the time in the world. Take your time. Yeah, but it's the same thing. Like we spiked down here pre-market, got close to 100, got close to par, and now all the way back here to 101.75. But this is where we were into the Fed. So is the dollar saying we don't believe you, Powell? Maybe. The spreads on the yields still 2-year is 4. That's a new low, by the way. The 2 years 4% and the 10 years 3.37. So huge sell-off in the 10-year. Again, just to look at it, this is the future. We're expressing the future here. 433 10-year new low here, all the way down here to like 320.
I got Kevin Bacon vibes in my mind, and all is well. Stay calm.
But again, if I gave you this chart, right, and I said buy, sell, or hold, this is a long-term chart. This is this is the 10-year futures, 10-year yield futures. You can buy these. These have been trading only since last September, so that's all we have. But that looks bullish to me, right? To me, it's not a bearish chart. Still, it's above value. Everything looks pretty rosy there. So does that mean, is this the pause that refreshes? Again, sucking the retail back in is really not probably not what the Fed wants, but that's what they're getting, because they're trying to, they're trying to have no landing, just continue the flight. I really think that's kind of the game here.
I love that.
We're going to keep
landing, soft landing.
Well, no, we're going to fly until we're going to keep filling it up in the air, and we're going to keep flying until we can't fly anymore, until we run out of gas.
Great analogy, Matthew. Great analogy. I know this, trading agricultural levered markets taught me the lesson that I will never forget. And that is, I don't care what my mind is telling me, what should be happening on the ground. I have to pay attention to the chart. Mm-hmm. And we wanted to talk a little bit about the bond chart. And why don't you bring that up? Because the move last year was like nothing we've ever seen before in our trading history. Yeah. And so,
but also the 20 years, 30 years before was also.
No, I agree. But all I'm saying, and we kind of talked about on the way in, is that trend can continue, but the reversion potential is clearly deep in your can if you want to short.
Yeah,
stay short. So you just have to be. That's the one beautiful thing about the profile and standard deviation trading in particular, because it gives you the potentials in the market. And I say it all the people like, you're crazy. How could it go there? I'm like, well, don't kill the messenger. I'm just telling you what the math is telling me.
Right.
And so when you look at that bond chart, I mean, just to get to the low of value.
Just to get the low of value is 138, which is another, $7 on the bond futures.
And then God forbid you get in there and you start filling some of those holes. I mean, that move last year was so epic.
Well, even you go back to the summer of, that's the most recent high, 167 to 117. That's 50. Halfway back, it's just somewhere up into here, 142, which is kind of this top part of that value area. 146 was the high which started the shoots and the shoot. Now we're doing the ladder, right? So the shoot, lasted from August until October. It happened fast, to your point. Like every day it was going down, down, down. Now it's just kind of, it was going up for, the same amount of time. I mean, this was October through December. So this is the same, this was 3 months, and now we're right about 3 months here. And yeah, I mean, why couldn't we go here or here? That's just half back, to your point. So, these moves, and you're seeing them. I mean, you're seeing them in the junky stocks. I mean, a good example of it is, let's look at Carvana and Peloton. Like, we talked about these, right? We said you probably should take a bite out of them here. I did not. I wish I wish I did, Bob. I wish I bought 10,000 shares at $3. I mean, there's not a lot of risk there. And that's a six bagger since the end of the year, $3 up to 20, right? $3 up to 20. And that all happened, do I think Carvana is now a good buy? Hell no, it's still worthless, but
right.
But
exactly.
What are you going to do? I mean, it's this, to your point, but that's why you have to, but this was the time to buy it. And we talked about it at the end of the year. You should probably buy a number of these things. Peloton did the same thing. It went and it's doubled. And again, they're not selling more Pelotons today than they were 6 months ago. So, and again,
yeah.
So yeah, to your point, this is just because your mind says I got to short this. Well, the chart doesn't say short it yet to me, and it also doesn't mean I want to chase it and buy it. So especially after we've gone up 20% in the NASDAQ. Maybe we have to go up another 30% and I'm going to miss it, but I don't know. That's just me. I look for certain types of setups. And again, this, the Peloton from 750 to whatever. And I think it was even lower if we pull back on the time frame. Yeah, I think it was down here in the 5s anyways. So these things have, they're playing out, but we're just long time basing here. And we're really just still in the top of the range that we've been in for 6 months, almost a year even. And you see that even in the NASDAQ. We're hitting new highs for the day here as we continue to. I mean, they're walking stops out every single high. That's all it is. You watch it today. Like we're up, the IB, we're up 100 from the IB, which is good, but most of the move happened again overnight. So you're up 450 points. You're up 3.6% today in the NASDAQ. You want to buy that up here? I don't. Doesn't mean it can't go higher.
You know what I was thinking? Because I like you, Matt. I'm a natural seller. I almost think that in markets that I have a fundamental block in my head, and I'll just call it what it is. It's a fundamental block.
Mm-hmm.
I should have like the put chart up and be trading the put chart that's getting crushed, because I can more easily sell the put chart than.
Yeah, but again, it's yes, you can. But they're cheap. They're not that expensive. That's the problem. It's like the volatility is so low. It's hard to sell vol, and take all that risk when you're selling puts. It's hard.
I agree. We used to talk about it trading currencies, because if it's the dollar versus something, you can flip that chart, right?
Mm-hmm.
And have the whatever you're trading versus the dollar. Because if you like bearish setups, there's a way to look at it that's bearish.
Yeah,
it's a psychological.
But again, I wasn't taking a position into the Fed, and I'm not taking one yet here. I've got to wait. Again, I think the jobs number, we know there's plenty of jobs. So this is the full employment is not a good thing for markets. That is not that's typically a warning sign. So we're beyond full employment. We can't find people still. So that's a problem. And yet the market keeps going up, right? So your fundamentals don't matter here. Like if you're a fundamental trader, they don't matter. And all you're saying, and again, will this breakout, if we close over 4,200, will it stay here? I don't know. Right. I can't tell you. I have not gotten a sell signal today or yesterday. We've just been trending. So there might be a trade later in the day. I don't know, but not right now. I don't, and if I took a trade, it would only be a day trade right now. I'm not looking to build anything. And you know what? I might miss a 2% breakdown tomorrow too. We might be right back, but I got a little bit on the puts that are out to March. I just, when I don't understand, I just pull off.
Right on.
It's easy as a trader. It's easy to do. Like I don't have a problem. It doesn't bother me because I know when the setups are there. And now this is not a setup I understand. Like I don't understand it. So why overthink it?
Very true. Very, very true. All right. What else you want to talk about here? Anything, anyone? Bueller, anyone?
Again, all assets are one. We're back to all assets are one. When that happens, it's very difficult to, and everything's been chased already. So like if you've been scouring, looking for the Pelotons and the Carvanas, 99% of them have already happened. So, and so that means you have to chase now if you want to chase.
Hey, Matt, you know what I did yesterday?
What's that?
No, it was the day before. I bought another pound of rub. That's what I did. Honest to God. I mean, you'd think I'd get it for free or something, but I'm on Amazon and I'm searching Shrimp Mojo and I'm buying rub because I just went through another pound of rub. I don't know how it happens, but it's like that Frank's Red Hot sauce. I use the rub on everything. Anyway, please go to Amazon.com, search Shrimp Mojo and buy some Manja TV Shrimp Mojo for your family. All right, man, what's the line in the Super Bowl?
Haven't looked. Don't know. You tell me.
Lee, what's the line in the Super Bowl? See, that's why we have a production crew here. at Market Vitals so we can get things answered.
Yeah.
Our production crew, by the way, as good as any out there, Lee, as good as any out there. The guy that Rogan's got, he's half. Eagles -2. Man, now that
Pick
you,
'em.
what's that?
I said pick them.
It's a pick 'em, or pick the Eagles. I don't know. All right, Matt. I was up.
Hey, how about these stats? My one of my sons threw these out at me talking about the GOAT since he, again, retired again yesterday. He's won more Super Bowls, 8, right? Was it 8?
He's been in more Super Bowls.
Yeah.
He's played in more Super Bowls than 32 of the NFL teams.
And he's won more than 32 of the teams.
It is, you know what? It's insane to me. It really is. It's insane.
So I will, and I said this to my friend Steve yesterday, and he was all, Mahomes. I'm like, yeah, it's possible, but Mahomes doesn't work that hard. He's more into social media and his high school girlfriend, wife, and I just don't see him winning it all, like Brady that many times. But so I said to him, I don't think in our lifetime records are made to be broke, but I don't think in our lifetime, we're going to see another quarterback that will beat Brady's performances.
Where is, speaking of that and sticking on hockey, where is Ovechkin in regards to Hull, Howe, and Gretzky?
I think he's now third. I think he took over Hull. And maybe he took something that just happened recently.
Right on. Lee, do you remember seeing Bobby Hall at the Garden? That's a good question. Yeah. How, the Garden has been around for a long time. It's amazing, right? When did the Garden open? And how loud is it there? Because I've never been in the Garden.
It's loud. I've been there a couple times.
Yeah.
Yeah. I mean, it's in the round, it's fun.
I wonder who has that stat right now. What is of course it was louder before the rebuild. Yeah, because they put in sound baffling,
Right.
It's a shame. It's a shame that you can't get that experience of those old stadiums. And what was the other one? Was the Barn in Detroit? What was that one? Didn't they call it the Barn?
Something. I don't remember. I was too young. I didn't, it kind of, Joe Louis was the new thing, late 70s, early 80s. Kobo was there too. And then whatever was there before Kobo. So I don't know.
You got some of those old buildings where people were like actually afraid.
But if you want to go experience old hockey, like I talked about, I think a couple of days ago, go to Yost Arena. You want to see one of the greatest places to see a hockey game. Yost Arena in Ann Arbor. They've kind of modernized it, but it's still the same small little 5,000 seater, and everybody's right on the ice, and they got the band, they got the Yost for children, section. They got the whole thing. It is rocking in there. It is loud, and they got their chants. Like, if you don't know what's going on there, you can be embarrassed.
Olympia Stadium, called the Barn. See, the Heifer's got some hockey knowledge.
Yeah.
Some hockey. I remember, people saying that they were
the
afraid
Olympia,
the Barn,
exactly.
The Olympia. They were afraid it was going to fall down while they were there.
Right.
Like, they need to replace this building, man. It is ready to fall on me.
Yeah.
All right.
It looks like NASDAQ looks like they want to get to 500, up 500 today. They're up 471. They got 30 more points. That gets us to 920 or so. I mean, again, they're just floating up. We're at 4,200 now on the SPOOs, everybody's magic number. So everybody gets short here. So that's going to go higher, to your point. There's no reason to not let this just keep running. And if you want to get long up here and tell me how great you are, that's great.
Be my guest. I just don't see how I don't see how there's a soft jobs number tomorrow. I just don't see how. There's too many.
Well, I don't expect anything bad. I just and bad would be good, and good is good. Everything's good right now. Like I said,
All right. That's all we got.
I mean,
Anything else?
we traded 40.48 yesterday, 40.50. That was the low after the Fed. That was it. And now we're up 150 points. I mean, that's a lot. That's a lot. But doesn't mean we can't go more. I mean, we're again, we're up like 11% now from 38. Where were we at the beginning of the year? What was the low? 30
In the SPOOs?
Yeah, it was 37 something. No, that was in December. So 30, let's call it 38.15. Not quite 30. We have not been at 38. Well, yeah, the end of the year we were at 3,800. But in the calendar year, the low this year is like 38.17. So we're up.
It's 38.14.50.
So we're up 400 points basically from there, which is over 10%, well over, because that's 380. And well, we're right there, right at 10%, right here at 42.
All right, Matt. So we got the earnings today. We got jobs tomorrow, and then we got the bumbling idiot next week.
Yeah, then we got the State of the Union. Yep.
And then after that, we got nothing till March. So the market can, right?
Yeah.
I mean other than, we're going to have, all right. Finding my way here, Matt. I'm finding my way slowly but surely.
Now, I will say this. I don't think the market, again, it's going to have to prove me wrong at 43.50.
You know what, the momentum modeling on the weekly, both the S&Ps and the NASDAQ are right at their momentum. They're up momentum levels, right? Which we haven't seen a test of those. Honest to God, when you look at this monthly, the SPOOs, the last time we toyed with this up momentum level was the 28th of March, that week of 2022. All right. And in the NASDAQ, the last time we had a contact with this momentum level was the 10th of January, 2022. So we have a long time since we flirted with these up momentum levels on a weekly. And that's what I'm kind of keying on, Matt, from standard deviation modeling point of view. Like longer term traders, if they've been short this thing since the turn back in early January, I'm talking NASDAQ here, when it came out of its momentum to the upside, they have to respect this retest of that momentum level. You have to respect it, because if it takes it out and we change the slope on this weekly, we're going to that 15,000 level that you talked about. I mean,
yeah, on the NASDAQ, yeah.
Yeah, in the NASDAQ.
Well, and let me show you this real quick. So 3,500 to 4179, right? That's what is that? 650 points, 660 points, 666, probably right on the. Well, it's interesting. It is. It is but hear me out. If you take 666 points from 37.87, where does that get you? 43.50 or so.
Yeah. Again, another nice lineup here.
And so if we close up here tomorrow, if we close above 4,200, that's the line in the sand everybody's got. 42.17. I mean, we ticked it here too. So, like, to your point, why wouldn't we trade to 42.20? If you really want to short, maybe sell 42.20 with a stop over 50. Something like that. If you want to get involved, but that alone, I mean, and why wouldn't we target 43.28 and then 666 from here gets you to 43.50? Again, 43.60, somewhere in there.
Bingo. Right on.
And then. Above that, now if you're closing way up there, why wouldn't we go to 4,500? Why wouldn't we go to 5,000? Why wouldn't make Kathy Woods great again?
She is the greatest trader of a generation.
I mean, 4,800 down to, and interestingly enough, we stopped at the 50% retrace, which was 3,500. That was the retrace from the COVID low to here. 50%, bang, nailed it. Anybody who bought that's been riding it. If you bought the 50, if you're a fib guy and you buy 50s and 61.8s, you didn't even have to take pain down to 3,200.
Right on. Interesting. Interesting.
And 3,500 to 42 is 20%. You're up. We're up 20% now in a very short time. I mean, this was, what was that, October that we saw the low there? Yeah. So October, November, December, January, 3 months, 1 quarter, we're up 20%.
It's a bull market, Matt.
You can
It's a
you
bull
can
market.
annualize that. We'll have an 80% return by the end of the year. So I guess we'll be at
All right. Hey, did Brett Favre, did Aaron Rodgers retire too?
no, I don't know. Did he?
I don't know. I'm looking forward to the next several years when the Lions are dominant in the NFC North.
It's still going to take a few years to win the thing about the NFL, it's hard. I mean, it's hard to get into the playoffs. And then once you get there, you got to lose a few times before you win, so I don't think it's going to be next year or anything like that, but it's interesting. It's interesting also that the bonds hit the 146 level and then sold all the way off $1.50 on the UB. So that was the top there. Maybe the SPOOs are an hour behind since the bonds are an hour ahead. Maybe, when did they start really selling off here? It was really right around 9:30, which was about an hour ago. So maybe this will be the top for the day on the SPOOs here at 4,200. I don't know about, or your 4,220. There's still no sell signals. I have not had one sell signal again all week. So I guess I should have bought. I didn't have a buy signal either because I'm not going to buy ahead of the Fed. So that's just my own rules. I don't trade. I try to avoid the Fed, and unfortunately, we're having more and more days like that where.
It's amazing to me too. Yeah, how much.
We
almost
have
too mad. Like social media has changed.
We have
the
CPI
dynamic.
the 14th. That could be the thing that takes us down. Who knows, or not? Takes us back up. Inflation drops again because they're finagling the finagle.
They're good at finagling the finagle.
Yeah.
All right. That's it. That's what we got.
Very good.
Lee, thank you so much. Matt, thank you so much. Please join us at marketvitals.io. Please go to Redbubble and get your Rub Me t-shirt. Please go to Amazon.com and get some Shrimp Mojo. And do yourself a favor and cook someone a meal. Matt, that's all we got, right? Somebody interacted with me on what even is a 15-minute city? Is that what it is? 15-mile city?
Yeah, 15 mile, which is the same as 15-minute, right? You can get everything you need is 15 minutes.
Here's the thing.
So it's kind of like living where we live, and that's gotten a little stretched. Now
here's my idea. Why not make it 150 mile? Right?
Yeah.
And you have to produce 80% of everything you need in that 150 miles. Because the thing that I find ironic about it is this is being pushed by the WEF and the globalists. But if you really think about it, the model is not good for a globalist model. It's good for ultra micro of everything. Like, yeah, all right, every community is not going to build their own cars, right? But you think about what you use on a daily basis, and if you ditch the globalist model and had to produce everything that you use within 150 miles, the globalists are out of business.
Yeah. But it's not about that. It's about controlling you. It's not. They're not going to.
I agree with you, but that's how it backfires. Listen, there's
one
thing.
No. But that's not even what they're trying to do. They don't. There's no. It's like listening to a politician tell you everything they're going to do. They have no plan how to do it, but they just tell you they're going to do it every time. Right? It's the same.
A chicken in every pot, Matt.
Yeah, I mean, it's just silly.
A chicken in every pot. All right, that's all. We got to go. I'll see you tomorrow. Thank you.
All right. Peace.